Dirty dealings, corporate battles, consumer woes. This is Evening 5. It is a surprise to many analysts that U-Mobile, instead of CelcomDigi or Maxis, won the bid to operate a second 5G network. This is simply because U-Mobile is relatively smaller than its rivals Maxis and CelcomDigi in terms of subscriber base and financial strength. As such, the expectation is that U-Mobile will need a financially strong partner to come on board. CIMB Securities commented in its research note that it makes commercial sense for U-Mobile to collaborate with Maxis and CelcomDigi to share the rollout expenses for the second 5G network, given U-Mobile's higher net debt to earnings before interest, tax, depreciation and amortization ratio at 4.3 times compared to Maxis 2.2 times and CelcomDigi 2.1 times. CIMB estimates 2 to 3 billion ringgit in investment is required over 18 to 24 months to roll out to 80% of 5G population coverage and 1 billion a year subsequently. This is higher than U-Mobile's average capitalized capex of 500 million per annum between FY 2014 to FY 2023. Also, CIMB shares the consensus view that the Malaysian Communications and Multimedia Commission's decision was unexpected, noting that Maxis and CelcomDigi were widely expected to win the second 5G network license. Kenanga Research, which was also surprised with MCMC's decision, highlighted that further clarifications are needed to clear the ongoing uncertainties, such as the telco partnership with U-Mobile to develop the second 5G network, Digital National's ownership structure, coverage and timeline goals for the second 5G network, as well as financial and operational health of the first 5G network operators. TA Securities has a more optimistic outlook, upgrading the telecommunications sector to overweight in light of the move, saying that it will help to clear up uncertainty in the sector that has weighed on overall investor sentiment. Meanwhile, BIMB Securities highlighted that this announcement will see U-Mobile solidifying its role in Malaysia's telco landscape, paving the way for a successful initial public offering listing ahead. Plantation Group Guthrie has teamed up with property developer AME Elite Consortium to develop a green industrial park within the Johor Singapore Special Economic Zone. Guthrie said the park will be developed on 641 acres of land in its estate in Kulai as a hub for high-value industries such as logistics, advanced manufacturing and clean technologies. It will feature a range of ready-built and built-to-suit factories. Guthrie signed a memorandum of understanding with AME Elite's wholly-owned unit, AME Industrial Park, to formalize the collaboration, which includes stringent environmental standards and sustainable practices. A joint venture agreement is expected within the next 5 months. Guthrie MD Datuk Muhammad Helmi Othman Basha says that this MOU with AME Elite signals its intent to create more revenue streams from its strategically located land assets and more value for its shareholders. AME Elite Executive Director and Group CEO Dylan Tantek Eng said the collaboration with Guthrie presents a significant opportunity for the company to advance sustainable industrial development in Malaysia. He adds that by combining AME Elite's expertise in creating award-winning industrial parks with Guthrie's strategically situated land, it will attract high-value industries and capitalize on the strong potential of the JSSEZ. TGI Fridays, Malaysia's operations in the country will continue to operate as usual and remain unaffected by the recent bankruptcy filing of TGI Fridays in the US, says TechnaX. TechnaX owns Kraviat International, the master franchisee and developer of TGI Fridays Malaysia. Kraviat operates under the franchise agreement with TGI Fridays franchisor, which is separate from TGI Fridays, TechnaX said in a statement. It also announced several new developments for TGI Fridays Malaysia, including the opening of a new outlet in Mid-Valley Megamall this month, the reopening of its Sunway Pyramid outlet in December 2024, and a new outlet launch in Putrajaya scheduled for the first half of 2025. On Saturday, TGI Fridays, which oversees 39 corporate-owned restaurants in the US, filed for Chapter 11 bankruptcy protection in Texas. TechnaX explains that this legal step allows TGI Fridays to reorganize and restructure its financial operations to ensure long-term stability. It added that the filing only affects the restaurants in the US, while franchise locations worldwide remain unaffected. TechnaX, formerly Sino Huaan International, acquired Kraviat, which is also the proprietary owner of the Teh Tarik Place brand, in 2019. Tuju Setia has secured a construction contract worth 411 million to build service apartments and landed residential units in Kulai for the Sunway Serene 2 development project. The job was awarded by Sunway Serene, a wholly owned unit of Sunway. The contract involves 2 blocks of 45-story serviced apartments with 9 levels of podium car parks and 2 levels of facilities, while the landed properties comprise 2 rows of 2-story Superlink residential units and a row of 3-story Superlink residential units. With Monday's announcement, Tuju Setia has secured 4 contracts this year totaling 1.19 billion ringgit. The latest job also marks the 3rd contract from Sunway for the group. Tuju Setia Managing Director Wee Eng Kong said that this win not only demonstrates Sunway's confidence in its capabilities, but also reinforces its reputation as a builder of choice for prominent property developers. Works on the latest contract are expected to be completed within 40 months once it begins at a date to be determined. The Malaysian Anti-Corruption Commission raided the office of a local fashion business along with 3 other business premises on Monday in a probe into significant investment losses incurred by Khazanah Nasional and Pemodelan Nasional or PNB, Bernama reports. In a post shared on MACC's official TikTok account, the agency revealed that the operation was conducted as part of the investigation into the loss of public funds totaling 43.9 million ringgit. The post also shared that the investigation was carried out under Section 18 of the MACC Act, although details regarding the locations of the other premises, which were raided simultaneously, were not disclosed. On Saturday, MACC Chief Commissioner Tan Sri Azambaki assured the public that the inquiry into the investment losses related to Khazanah and PNB involving the online fashion business will be carried out impartially and professionally.